Hello, everybody. Hello, hello, hello. I just want to make sure that we are truly live. I am going to be sharing my screen. Hello, my name is Dr. Melissa Lambert, H.C. and I am a licensed financial consultant with Core Financial Partners. And I'm also a licensed practitioner of the Nelson Nash Institute. And I'm just so excited to just be able to come here and just share today. I am going to talk about the future for our kids, and I'm talking about protecting our children. So please take heed to this information. If you are a mother, if you are a father, if you are an auntie, an uncle, if you are a sister, a brother, like understand something. We need to protect who we love the best, the most, right? The best, the most, are just ones we love, our loved ones. So I'm going to share my screen shortly so we can kind of go dive deeper into the conversation on today. I'm going to give me 1 second. Let me just bring this on. Let's see if I do it this way. Would it show? Give me a second. I hope everyone is doing well on today. I believe that there is some greatness going on for all of us. And I am loving what God is doing in this season. Here we go. And we are about to get going and growing that part. So again, my name is Dr. Melissa Lambert, and I am with Core Financial Partner in also partnership with Lambert Legacy Financial. I just want to kind of give you a little bit about my background. I am a licensed, as I stated, financial consultant, licensed practitioner of the Nelson Nash Institute, as well as a core financial partner. I am very passionate about what I do. I'm very passionate about the people I love and those who trust me with their information. I believe in empowering individuals and their families to take control of their financial future and create a lasting legacy, creating wealth that lives beyond ourselves. So, again, my goal is to share with you how you can protect your children with the infinite banking's concept. So, how I can help build this wealth and security for you and your family. Let's go. So again, I am Dr. Melissa Lambert, H.C. And just to give you my vision and my vision at the end of the day is to educate. The Bible speaks about it very loud and clear that the people perish because of what? The lack of knowledge. So I want to be able to educate you, give you guidance, and empower you to believe that you can become your own bank, as well as taking charge and control of your financial freedom. What is my mission at the end of the day? My mission is to provide financial education and tailored solutions that transform families and individuals from dependency on traditional banking system to complete financial independence. So if that's you, I'm glad that you're here on today. I'm glad that you're watching this YouTube. And I want you to share this with someone you like, love, and trust. Even your worst enemy needs to hear this information. As long as they have a child or children, they need to know that they need to protect their children. So here are the 5 paths to secure your child's future wealth. So I'm going to go into just list them out, and then also we're going to talk about it as well. So pathway 1, cash value and living benefits. Pathway 2, they will always be insured. Pathway 3, guarantee future insurability option. Pathway number 4, future family protection at locked in rates. Path number 5 is the time and a resource to grieve. So I hope that I have to unshare this so I can actually make sure you are able to hear the sound from this video, because the next thing you're going to hear is a video. So let me just confirm that you're able to hear the sound. So let's go back into this right now. Hold on one second. Perfect. Okay, let me just make sure you're able to see this. Hold on one second. I want to make sure you're able to see this. Okay, here we go. And now let's go right into the video. Okay, here we go.
Whenever we borrow money to finance the purchase of a car or a boat, furniture or appliances, a new roof or home addition, a college education or postgraduate degree, we typically pay more interest to a credit union, bank, or finance company than we earn on our own savings and investments. For example, we might pay interest rates of 6 to 13% on a car loan or credit card, while we earn as little as 1 or 2% on a savings account, and hope to average 7 or 8% on a 401k account. But now there's a way to become our own bankers and profit from our own borrowing, because now we can set up our own bank and pay interest to ourselves on our own terms and without any application or loan approval process. It's called private equity banking, and it's made possible by Internal Revenue Code Section 7702, which allows us to put money into what the IRS refers to as a qualified contract with a legal reserve insurance company. This provision of the tax code allows us to transfer money from our savings or investment accounts into one of these qualified contracts, continue earning interest or dividends without any taxation or investment risk, and then borrow up to 90% of this money using the contract equity as security or collateral. Of course, there is an internal cost or charge to borrow the money, in much the same way that banks must pay depositors for the use of their money, which means that we are obligated to pay off these loans with interest, just as we do with a credit union, bank, or finance company. But with our own bank, our loan collateral continues to earn interest or dividends without any taxation or investment risk, so our bank equity continues to grow while we use the money any way we want. What's more, there is no application or qualification required, no credit check or reporting to any credit agency, and no delay in getting the money. You simply submit a one-page form and get the money by check or direct deposit, usually within 48 hours. And like a revolving line of credit, there is no mandatory repayment schedule. So we determine the repayment amount, the months or years for repayment, and the interest rate we pay back into the contract. And any interest we pay over the minimum is a profit for us, which is added to our bank equity. This is the same way that banks and finance companies profit from lending money. However, before we can borrow any money, we must capitalize our private equity bank by transferring money into the contract that would otherwise go into our savings and investments. This might include a percentage of our monthly income, a yearly bonus from our employer, annual tax refunds from the government, or any inheritance from our relatives, as well as money we've already saved in other accounts. But once our bank is sufficiently capitalized, we can borrow against the contract equity at any time and as often as we want, without any credit check or loan approval process. We can simply submit a short one-page form to borrow up to 90% of our bank equity, and the money is either sent to us by check or deposited electronically into a checking account within a day or two. Some contracts even provide debit cards that we can use to access our funds, similar to a revolving line of credit. What's more, we decide when we want to begin paying off our loan, how much we want to pay, and how often we want to pay it. However, we want to have all our loans paid off by the time we retire, so that we can then supplement our retirement income with tax-free money from our private equity bank. And if the contract is properly structured, any loan debt remaining at the end of our lives will be contractually paid off for us, tax-free. To learn more about setting up your own private equity bank, talk with a financial security professional who asked you to watch this video.
Wonderful, wonderful, wonderful. So just want to make sure. Okay, great. Awesome. I wanted you to see that because there is power in knowing the information. As I mentioned before, when you know better, you can actually do better. So I am grateful that you are able to see this information and be more aware that the truth is now truly out. So there is power. There's power of becoming your own bank. There is power in becoming your own bank. So what is infinite banking, you may ask? Infinite banking is really a system, a strategy that we are using, which has been around for over a decade now, over decades, right? Over 200 plus that years this has been around. It's a financial strategy where you use a properly structured whole life insurance policy to create a personal banking system. And that's being done by a person like myself who's licensed, a licensed practitioner to be able to do this, or someone who work under a licensed practitioner. Prior to me being a licensed practitioner of the Nelson National Institute, I work and still is working with my partners, Latoya and Tony Chambly, and I am happy to know that they are helping me along the way to help to bring the truth so America can wake up and be woke. Because I'm awake. I'm awake now, knowing this information. So you will you will also help, this will also help you manage, grow, and access your money with tax advantage and liquidity, and also help you to own and control it as well. So let's continue on understanding on how we do it. Unlike traditional whole life insurance and IBC, which is what we call infinite banking, is designed policy to maximize your cash value growth, allowing you to borrow against it while still earning interest on your full balance, just like a bank. You know, the bank don't you haven't realized that the banking system was always created for them to win, never for you, right? You are their business. You are their business. So instead of relying on the traditional bank, you are now becoming your own banker, using your policy's cash value to finance purchases, pay off your debt, invest in, even go on vacation, or grow your wealth, which is what we want you to do. So, infinite banking, a financial legacy for your children. This is the perfect legacy to have for your children. I know my parents, if they knew about this, they would have put this on all three of us. However, they did not know about this, right? But now that I know about this, I'm gonna make sure this is passed on to my daughter, Chelsea, to my nieces, to my nephew, and for those or my clients who have children, and for their generations to come. I want to make sure they understand that legacy can be built not just by you working, but by us also being passed on to you as well. The infinite banking concept allows you to create a financial foundation for your child or children using a whole life policy with a person like myself who is able to help structure that so you're able to use the cash value and living benefit as well. Infinite banking can allow you to have a financial legacy for your children. So I am pleased to be able to share this information with you and allow you to take initiative now rather than later. So I talked about the 5 different paths in the beginning, and I'm not going to break them down so you can understand the benefits from each of these pathways. So pathway number 1 was cash value and living benefits for your child's future. That is the cash value earned from a permanent life policy, like a whole life, can be used for, remember, these kids are going to grow up. they're going to want to go to college. So you can use that for tuition and expenses. These kids are going to want to buy their first car at 16 or 17 or 18. Now you can finance that vehicle through this bank. They're going to want to get married, right? So now that they're at age and they're now found a spouse or found a spouse found them, you can use the same bank to help pay for their weddings. They may want to get their first home and buy their first home at 21 or 25, right? Now they can use this right here as a down payment on their first home. They can even use it to start a business. They can also collateralize by borrowing making buying getting a loan from the bank, right? So there's so much they can do with having a cash value and living benefit policy at their young age. Now, pathway number two, lifetime insurance protection. Health issues like high blood pressure, diabetes, obesity, whatever illness that may come about can impact insurability. So buying a whole life policy for your child at a young age ensures they will have and always have coverage regardless of their health challenge. I've had clients that has 15 14-year-old and 16-year-old, a 14 and a 16-year-old denied for coverage because of obesity, right? Because of not because of what they have, because of their body is overweight, right? So they're not able to get insurance at 14 and at 16. But if their parents had did this at a younger age, that insurance protection, meaning they will be basically covered for, they can have multiple policies because of the insurability that was placed on them when they first wrote their first policy. So I tell people, don't wait to put insurance on your kids. Do it as soon as possible, because you want to be able to cover the fact that you never know what would happen. They may gain weight, they may have high blood pressure, high cholesterol, fatty liver. These are things that's happening right now to our children. And because of their now, like prime example, I can say my own daughter, she has coverage and she has the insurability no matter what. Yes, I am maintaining my daughter's weight at this time and, helping her, making sure that she choose the right lifestyle of food that she's eating and the activities, but things can happen, right? God forbid. But guess what? Chelsea has two policy, one with her father and one with me. So far she has coverage, and I can open 5 or 10 more policies on her. And it would never change her insurability, because guess what? I had this coverage on her since she was 8 years old. Really, she was 7, but the insurance age was to turn her to 8. So she at 7 years old, Chelsea received this policy, and to this day, she has continuous insurance. And I will be adding every single year. My goal is to add 2 more policies to Chelsea. Why? Because the more policy I know that she can have, I can have one for her wedding, one for her school, and one for her travels. I can have one for her, for her children. So I can bill out policy and give it a name. My goal is to show Chelsea how to have an effective system that she can bank through, that she can call her own. So lifetime insurance protection is really important, especially that our kids are, they're aging and the food that we're eating nowadays is not good, right? And we know that something is going to happen sooner than later. So we want to make sure we protect them and protect them now. Pathway number 3, guarantee future insurability, just as what we just talked about. It's the same, that protection. Now, this is the guarantee future insurability. So whole life policy offers guarantee insurability rider. And that's what I have on Chelsea, my daughter. This allows additional coverage without a medical. That's the important part. Medical exam, ensuring lifelong insurability regardless of future health condition. That part. We want to be able to make sure our children has this guaranteed future insurability because things change, our health change, and we want to be sure that they have the coverage that they need no matter what happens within their lifestyle. We do want them to have a good healthy lifestyle. We do want them to make good decisions, but still life happens. Number four, the pathway number four, locked in rate for life. Whole life insurance for children comes with lower premiums. Locking in rates early ensures affordability, lifelong coverage and financial security for future families. So yes, your money may not be at the place where you want it to be now, but you decide, you know what, I'm going to put $50 on my daughter or my son, or I'm going to put 20, the minimum 25 on them. Something is better than nothing because you will see the actual growth of how that money just grow over time, even at a low amount of $25 to a high amount of $500. No matter what it is, you're now able to secure at a low premium when you lock in the rate at this age. So as they age, you can still add as much as you want. I told you Chelsea has two already, and but by the end of the year, she's going to have a third one. Going into 2026, another one. And my goal is to continue to grow her bank. So by the time she's my age at, over her 40s, she has something to pull from, and she can access for emergency. She can access for travel. She can access for school. She can access for a car, her down payment for her first home, because mommy decided to do something early than later, right? So yes, lock in the rate for your child. Protect your child now. Stop saying I don't have it. The minimum we can work something. We can look into things that is going to benefit your child for their future tomorrow, because you're thinking today, but remember, they're going to age, they're going to continue to grow, and you want these children to have something that they can say, mommy and daddy thought of me at a younger age, so now at an older age I don't have to struggle the way I saw them struggling coming growing up. pathway number five Pathway number five, financial resources in time of loss. If the unmeasurable happens, something happened, right? A whole life policy provides financial relief, allowing your family to grieve, without the pressure of worrying about, overtime, worrying about how am I going to pay this bill, worrying about the financial issues that comes with loss. Now you can say, because I had a financial consultant like Dr. Melissa Lambert, she helped me to see this see this coming. She prepared me for what's to come. So this financial resources will help you in the time of loss. Because guess what? Just like life it is, is promised in a way to people, so is death. Life is, we are living, breathing above the earth, but there's going to come a time when we need to be beneath the earth, right? Not saying wishing death on anybody, but death is promised to all of us. We just don't know when that time will come. So when that time come, at least know that you're prepared. At least be prepared, right? And rather than going into life thinking like nothing going to happen. I was telling somebody the other day with my travel business. I said, look, we travel, but we don't realize that things can happen, right? Things can happen today or tomorrow or a couple of months from now, but at least have travel insurance. Just like you have car insurance, you never know when that car is going to go and get into an accident, but you have it for that just in case it happened. The same thing with life insurance, the same thing with travel insurance. Insurance is there not for you to say it's going to happen. It's there because it may happen. And if it does happen, guess what? Now you have the coverage to be able to say, I can breathe, I don't have to stress because I protected myself and I know that I have the coverage that's necessary to help me through my life journey. So those were the five paths that we talked about. So how do you now, as a parent, build wealth for your child? It starts with something as minimal at $25. Chelsea's policy is not $25, y'all. She has a hefty policy. She has two hefty policy starting at 150, right? That's the reason why I did it that way, because I want her to be able to, we missed our time. She started when she was 8 years old, right? So I want to be able to build upon her life insurance policy. So you can start at where you are. What do you save right now? Let's split that between your children so you can now have something not only for you, but also on those children as well. A whole life policy can create again a financial asset for your child. Don't look at it as a bill. This is an asset. It's like opening up your life insurance policy for your child is their business. It's opening up a new business. That's what that is, because it's an asset that will grow for them over time. You can start this as little as $25 per month. Invest in your children's future, not tomorrow, but today. We got to protect what belongs to us, what we love so much. Here at Lambert Legacy Financial, I am a partner with Core Financial Partner, but I want you to understand I'm here to help you protect you and your children. I want you to understand the power behind, you seeing the need to protecting your children today. So myself and my partners at Core Financial Partners, we are going to share this information and help you on this journey to protect who you love. Protect first yourself, because you got to put the mask on you. Make sure you have enough protection. So God forbid anything happen to you, your family's protected, but also protect your loved ones, protect your children. You worked for these kids. You now go to work to provide for these kids. So why don't you have protection and give them an asset that will grow with them over time? Because at the end of the day, just like you grow into adulthood, they're going to do the same. And you want them to be better and greater than you. So because you want them to be better and greater than you, you start this process today. So I would like to help you on that journey to be able to make sure your child is protected. So I'm going to show you what my daughter's policy looks like, and I'm going to try my best to zoom in. I don't know if you can see. Yeah, okay, I did zoom it in. Let me see. I'm gonna zoom out a little bit more. Oops, let me go back. Let me see if I can zoom in a little bit more. There you go. This is my daughter's policy. This is one of the policy that we got when she was 13 years old. So this is when she was 13. It was really when she was 12. We got a policy on that for her. And we started at 150, right? So if you see the breakdown right here in the second year, it's all the way down is 1800. 1800, if you divide that by 12, that's 150 a month, right? So we did a dumping of 2000. We did a dumping of 2000. Sorry, 1,225 dollars is a one-time dump in. Her initial her benefit. Remember, children can only have whole life. They cannot have term on them. So this is a whole life policy. So her death benefit is $126,310. But look what happened to her death benefit with the cash value and even her dividend of $13 that year. That cash and a dividend grew her death benefit to $141,674. But I want you to take a look at this. When Chelsea's 18 years old, she has $11,045 in her account, where if she decides she want to throw her 18, she want to go away for her 18th birthday on a cruise or something, she can do that. She can actually do that with her policy. She can take out a loan, borrow maybe $8,000 from this, and mommy, I want to go away. Not only go away, but I want to be away for a whole month. She can now go to Thailand for a month and live off her 8,000, a couple of months, and live off of $8,000, right? Or she can take that money. So you know what? I want to buy me a car. Can I use this for a down payment on my vehicle? But look also what happened to her death benefit. What started at 126, 5 years, well, not 5 years, 6 years later grew to $174,096. I want to bring you all the way down to, let's go to 20 years from now, 23 years from now, she'll be 32 years old. right here. At 32 years old, she has $51,000. Tell me what 30-year-old right now, the 32-year-old right now has $51,000 in their account. And remember, Chelsea has two accounts. So her account, she will have over $100,000 in her account by she's 30. That part. And it's really more because one of her policies she has when she had that policy since she was 8. This is a policy that was written when she was 12, right? So even if it would have been, it will be more than that, right? But look at her death benefit, which started at 121. 20 years later is 278. And if you go all the way down till she's 47 years old, I'm going to show you something. At 47 years old, her her cash value is $134,000. She can even put down a deposit on a house. If she want to buy a house out of the country, she can buy that house out of the country cash, borrow $100,000 from her policy and go buy that house, right? Or buy a couple of cars and rent those cars, lease those cars out, right? Something. But look at her death benefit. What started at 121, 126, 35 years later grew to $408,000. What started cash value at 2,130, 35 years later grew to $134,000. This is what I'm talking about. Asset. She can say, I have an asset worth of $134,000. Or by that time, she gonna have a couple of assets that's gonna be worth over $500,000. She can tell anybody that. She can say, oh, and my death insurance is over $3 million. You should be able to want to set your children up for life, not allow them to work as we have been working paycheck to paycheck in survival mode. So prepare your children because you would have wanted to be prepared in this manner. So now that you know this information, what would you do with it? What would you do with it? That is my question to you today. And my prayer is that you don't take this lightly, that you decide to say, I'm going to reach out to Dr. Melissa Lambert, who will help me to open up some policies for my children or for my child. Don't delay on this information because you're saying, oh, I'm a single mom and I don't have it. Yes, cut back on eating out. Cut back on getting your nails done. Cut back on getting your hair done. Cut back and put that money into your policy so your child won't have to suffer and lack any good thing because you prepare for their future today. Okay? I get passionate about this because I wish parents can wake up and understand why infinite banking for their children is a secure way for their future. So now let's talk about the why. Why infinite banking for children? How this secure your child's future. One, start early, grow bigger. Starting an infinite banking policy at an early age, set your child up for a long term, for a lifelong financial security. With a policy started at a young age, the cash value grows. As you can see how Chelsea cash value from 13 years old to 47, how that grew from $2,000 to over $134,000. You see the growth in that, right? Because we started out early. Chelsea's going to age. She's going to grow, right? So regardless, as she grow, her money is going to grow. Create the asset for your child and your children today. Don't say, yeah, no, I'm good. Why? Even if you only got $25, put it away. Your child deserves something. They're worth more than $25. Right? You buy them all these, name brand sneakers, name brand clothes, all that you buy them, but they don't even have asset on them that grows into something greater over time. Make that make sense. They're worth more on items, things that they play with, right? Things that they wear than they have really in their bank accounts. Wake up. Parents, wake up. The second thing that's going to help, secure your child's future is the benefit in childhood. One, the lowest premium for them, a lower premium, guarantee insurability. This can help with their educational fund. If they don't want to go to school, college, this can help start their own business, right? This can start a business for them. This can help them borrow from their policy and like literally do something great with their life. Third is the benefit that they will receive as an adult. This concept can help them to be debt free. Your child can grow into adulthood with no student loan. They will have access to liquid capital for any needs necessary. Your child will build wealth. The policy cash value continues to grow, creating self financing tools for purchasing a home, starting a family, growing their wealth in the future. And lastly, legacy building. The policy continues to grow and can be passed on or passed down to future generation, ensuring long-term financial security. That's where we get the word legacy from. So I get passionate about this because I'm a parent. I'm a parent and I believe that we can help our children succeed. How can Lambert Legacy Financial help you? Again, I am a part of Core Financial Partner, right? Lambert Legacy Financial is my brand, but I'm a part of a corporate, a company that holds truth to understanding it is more than just, we're just saying information. We are creating a movement, a crusade at Core Financial Partner. So what do we specialize in? Establishing infinite banking for your child. We specialize in building cash value for lifelong financial benefit. We specialize in lock-in low rates for lifetime coverage. And I will also help you secure your financial future through strategy planning. As a mother, as a father, you need to have something planned for yourself as well as for your child. Don't be fooled by thinking that you're the only one that need protection. Protect your children so they don't have to work like we are working and being what we call living from paycheck to paycheck, just surviving rather than thriving. You want to set your kids up to thrive. You want to set them up to succeed. You want to set them up for success, not for them to feel like, oh gosh, I'm tired of being broke. I can't afford this. Why? If you know now what this information is, why aren't you now starting a policy on them today? So I would love to know and hear from you so I can help you on this journey. So it's time to take control of what you work so hard for, your money. Help your child in the process, help your children in the process. It's time to reverse the roles and become the bank. Teaching your children what that looks like. Take control of your financial future, first for yourself, but also for your entire family. What you're going to do, you're going to leverage the infinite banking concept and start benefiting from your hard earned money. That's what you're going to do. So the first thing I want you to do is visit lambertlegacyfinancial.com, lambertlegacyfinancial.com, and schedule your free consultation today. I am a part of Core Financial Partners. So I want you to find out more about the infinite banking concept by going to learnmovewithcore.com, learnmovewithcore.com. And then after you have also explored that, you can still continue to go back to lambertlegacyfinancial.com and book an appointment. Don't waste time. Book that appointment ASAP. I want to be able to not wait for tomorrow, but because tomorrow is not promised to no man. I want to be able to help your child today, right? Protect you and your family. Don't just protect your children and you're left open. There's a way that we can move your savings to your private family bank, that your entire family now has its own bank and you're protected within that privacy. So what is the next step? As I mentioned, connect with me, Melissa Lambert, to receive a follow-up email to which I'm going to have you fill out, and we're going to do together your private priority plan and review. I want to schedule where we can do a one-on-one session so I can learn more about you, ask you a couple of questions to make sure we're on the same page and you're on the same page. I'm also going to then fill and send back what we call a health and life profile, which is really an application to the insurance to kind of let them know what you're looking to do and see if you are able to be approved from that amount. We're also going to schedule what we call a bank preparation. So I'm going to show you what that bank will look like. Then after that, I will deliver your policy to you. And then number six, a final is we're going to continue to learn. We want this to be a generational wealth. We want this to continue from generation to generation to generation. So don't forget to go to LambertLegacyFinancial.com. Your kids' financial future is important. Your kids' financial future is important. If you don't think that is important, why are you working so hard for them? Oh, I'm working for my family. This is all for my family, but you can't even protect your family. Make that make sense. We have to really see life as what it is. It's not for today, is what's for tomorrow. Because if your mom and dad did what they should have done today for you, did what they should have done for you when you were a younger child, you wouldn't be in a position that you are today. So I'm asking you, be better than your mom, be better than your dad, and you're going to raise your children to be better and greater than you as well. Right? Protect your children's life today. Again, I am Dr. Melissa Lambert, H.C. And I am a licensed financial consultant with Core Financial Partners. I am also a licensed practitioner of the Nelson Nash Institute, and my goal is to help you. Your goal is my crusade to be able to get you into informed, get you to understand how important it is to put the mask on you first to make sure you're protected. But in the meantime, while you're protecting you, make sure your children is also protected. Give them a better life than you have been given to yourself. Give them a better life than the life that was given to you, so they don't have to struggle and suffer like you are right now, living paycheck to paycheck. Or you're in that place where you can say, you know what, I can breathe, but I wish I had an asset that has grown over time where I can borrow from and be able to pay myself back and utilize it as a tool, which is learning how to be my own bank. That's the opportunity that you're going to give your child. You're going to give them a business, an asset through this infinite banking concept. So I look forward to connecting with you and helping you on your journey to what? Protecting yourself, but also also importantly, protecting the future kids that you're raising, the future children that you're raising. Let's protect your future children. Your children's future is important, right? Go to LambertLegacyFinancial.com. LambertLegacyFinancial.com. Again, thank you so much for listening, and I look forward to connecting back with you. So I truly, truly, truly appreciate each and every one of you for tuning in on today. Okay, here we go. I hope that this was helpful. And I know that you're going to walk away feeling informed and feeling like I can do this and I need to do this. So let me connect with my new financial consultant, Dr. Melissa Lambert, H.C. I am your new financial consultant, and I'm ready to help serve you and serve you truly on purpose. Until next time, looking forward to hearing from you. Go to LambertLegacyFinancial.com.